as far as for the scalping and with futures, because it's just I did some back testing on it, and during high volatile times or with a trend, it's really good in keeping you in the trade and keeping things a little bit tighter
Mm.
than some of the other moving averages I was using before, even on lower time frames. You don't have as much wiggle room in futures to make some mistakes, especially if you're using size. So I really like that. It's another good alternative when you're trying to scalp, and I like looking at that.
And you can use it on any time frame too, depending on the size of the account that you're swinging. I like that
Absolutely.
I'm using 0.5% risk as full size right now, and that definitely keeps me alive to trade another day. If I get a good day, if I get in with one full size win, that's 2.5% on my account,
Nice.
and
I
that's
think
decent gains.
now I've seen some traders, they actually just trade off of, they'll use an eight and they're only trading in the direction of where the eight is physically going.
Every time I lean back to that, I do very well. And I'm not going to fib. When I add new things, I typically trip up, and that's not just me, it's everybody. So I'm adding Fibonacci's, as you guys know, and really all the levels. The rest of the levels I've been adding the last few months now, I'm kind of incorporating a lot more fibs. So I have to be aware that it's going to trip me up. But honestly, at the end of the day, if I just stay on the right side of my smaller moving average, whether or not you're using crosses or clouds or singles or doubles or triples, it's hard. Obviously, this is not going to be the best view to show, but you're going to be right enough. For me, I think the only problem I struggle with that is exiting, right? So if I'm going to trade that method, I
Mhm.
also need to exit when it comes off on the other side, and I still am superhuman struggling with that.
If you're trading that small of a moving average, you have to really go off of feel and that sort of thing. Yeah, time is of the essence, and then you get a lot of wicking and all that too when you're in lower time frames. So it's sort of dicey too to know if it's a fake out wick or if it's confirmed. And sometimes it can go get past you before you actually get to exit. But you're right though. If I can see that working for you quite a bit, especially if you're in the flow, you're feeling the market, and you're just tune. What's the Mark Douglas in the zone, right? Then that can really get have some positive effects as far as your equity and the positivity of your accuracy on your trades.
But that's where I get tripped up. So that's why I won't rely just on that. Because well, for multiple reasons. Reason number one is there's simply too many opportunities all day, and it becomes very addictive, stupid behaviors. But reason number two, and at least I'm over mostly that one for the most part. I'm still human, but mostly over that one. The part that still trips me up is, let's say I'm looking for the sells. I'm struggling to, well, now I'm no longer on the right side of the most moving averages. Let me just close, and worst case, I can get back in. I struggle right here. And I don't know why. If my bias is playing out, I'm like, no, I'm seeing the sell. Let me give this trade room to breathe. And then when it's crossing back above, I'm not trusting that cross anymore. So that's foolishness.